Hello everyone, it is Evan here from the Trade Risk, back again with another Stock Market Weekly episode for Friday, January 19th. Let's get into some of the headlines here with technology leading the upside here. Remember, just 3 weeks ago, as we started 2024 and we saw that abrupt, knee-jerk, violent sort of sell-off in technology as everyone sort of looked at small cap stocks or some type of changing of the guard. Well, here we are just 2.5 or so weeks later, and technology is back, ripping to the upside, making all-time highs. Nasdaq 100 and S&P 500 closing for the first time in a couple of years, since 2022, late 2021. We'll take a look at those charts in a little bit. We are getting some sector disparity, though. It's kind of picking up here on some sectors that are winning and losing. Not everything is working right now. We're going to talk about that in just a little bit. Meanwhile, we have yields that are continuing to sort of knock on higher and higher levels. We got almost up to 420 in the 10-year. It did back off going into the weekend. China also really just kind of breaking down. That's not an also. China is doing the exact opposite of United States markets here. Generally speaking, even Europe and kind of ex-US, things aren't as rosy. China oversold, breaking down. Natural gas, it's just amazing. It's such a kind of a temper tantrum sort of trading vehicle. It has got big moves both directions this week, just plunging after such a good performance to start the year, and we have earnings season about to heat up. So lots to talk about. Stay tuned here for this episode. All right, we are back here. We've got some charts in front of us. Warden TC2000, that is the charting platform we're going to be using in today's video. For you new traders that are perhaps looking for a different charting platform, something to track markets, build watch lists, trade, stock scans, all that good stuff, check out a link in the description of this video. We've got a referral to TC2000. It'll save you some cash. And also we have lots of cool things built for this platform. Most of the indicators, templates, layouts are available for download on our website, thetraderisk.com. So check that out after the video. So let's get into the numbers here. 1 week returns. Follow my mouse up here. You can see, generally speaking, a pretty positive week. If you weren't in the Russell 2000, Russell 2000 was the only negative return this week, down 0.38%. Nasdaq 100, though, was just a big monster story here. 2.86%, really coming roaring back and taking leadership charge. If we take a look at volatility, though, this is a little bit curious because we did get volatility up. So we saw markets up, volatility up. That generally gets people's ears kind of perked up and paying attention. And we are going to pay attention to that ourselves. So we do have volatility indices here at pretty low levels, generally speaking. VIX at 13.37. That's quite low, but it was still up a little over 0.5 point this week. Again, we've got lots of earnings coming up next week. So earnings are going to start to ramp up the pace. We'll start to get some tech earnings. Tesla, Netflix, not many others of the Magnificent Seven, I don't believe, until the end of January, but we can see great performance for the most part this week on these nice little charts. If we take a look at sector performance, this is what I was talking about just a moment ago at the top of the video. We are seeing a little bit more of a divide here. So at the top of the list, we've got technology, which is just trouncing everything. Trouncing, I don't know if that's a word, but it is outperforming handedly here, up 4.13%. Communication services, look at the spread between the first and second sector here, even 1.38%, and then financials up almost 1%. But most of the action this week was to the downside, in fact. So utilities, energy, and real estate all down 2 to 3%. Now let's take a look at the sectors here, looking at our smart trend filter. So this is an indicator we have built for TC2000. It's also built for TradingView, and this just helps us cleanly measure trend strength, path of least resistance, nice and color coded and easy to follow. And of course, we still have plenty of sectors that are in uptrends, but if we look here, for instance, consumer discretionary started to print sell signals all the way back here to start off the year, January 4th, and it hasn't recovered. It's been either sell to neutral since the start of the year. Real estate rolling over this week as well, producing sell signals. Energy's been in a tough spot, but sell signals here. Financials starting to get its act together. This was one of the better performing sectors this week, but it did start to briefly dip here. Industrials also looking a little bit weak. Materials starting to roll over. Utility starting to roll over. Biotech starting to be a little bit more choppy as well. So there's some things happening underneath the hood. We're going to want to pay close attention to this. There's some warning signs out there depending on what sector you are in. Now, if we take a look at market breadth to try and get a better look at this, again, you can see we did get a little bit of a flare up here on the percentage of stocks or the number of stocks hitting 52-week lows on Tuesday and Wednesday of this week. But you can see we kind of cooled back down into the weekend. You can see that we did started to get a bit more buying going on here on Friday, which we certainly should, given that a lot of the indices are hitting new fresh all-time highs in the S&P 500 now. Same with the Nasdaq 100. So you would want to see this expand here, but again, you're still getting mediocre numbers at best. You're not getting very exciting numbers here underneath the hood of things that are working. Now, if we take a moment here and take a look at IBD's list, so Investors Business Daily, they are a sponsor of the show, so thanks to them. You can support us, support them with a link in the description of this video. This is their top 10 stocks. There's the IBD 50. I'm looking at the top 10. This was the performance this week. So again, you can see pretty good constructive numbers here, generally speaking. GCT, their top rated stock, definitely taking a little bit of a break, but it's had an absolute monster run over the past couple of quarters. And generally speaking here, again, pretty good spot to be in. So check out that link in the description of the show. And we're going to move on here to commodities, which were, again, kind of a mixed bag, mostly positive. I mean, agriculture was up nicely this week, up almost 2%, the DBA ETF. Copper was up. Oil was up. Inside week for oil, but up. And the dollar index was up. On the downside, we did have gold, silver, Bitcoin, all down 1 to 5%. And natural gas, this is the heartbreaker here. This is the one that just totally went off to the races. We'll look at the chart later, but you can see printing a fresh sell signal here on our smart trend filters. And last but not least, if we take a look at yields, you can see that mostly higher this week. So again, in the face of equity markets hitting all-time highs, we also saw interest rates marching to multi-week highs, and we saw, in fact, the 10-year Treasury yield knock on the 4.2% number. It did back off a little bit here, but you can see since the start of this year, we've put in a little bit of a local bottom here, and we are in rally mode. So we're certainly not back into the uptrend that we saw in the second half of 2023, but we are starting to march higher, and lots of people are paying attention. So let's take a look at price action now. Let's take a look at the S&P 500. This is where we'll start. We've been talking about this roadmap and this range most recently over the past couple of weeks, and you can see that the S&P 500 has taken this range in stride, has broken out to the upside. This was Friday's candle here, kind of springboarding up and reclaiming the all-time highs that it made back in, it was right at the end of 2021, January 2022. And so here it is, S&P 500, fresh all-time highs, a good win for the U.S. economy, I suppose. Now, let's take a look here at the weekly chart. This is what things are looking like, and you can see that, again, pretty constructive. I've just got so many drawings here, and you can see, like, this is the big picture. We've rounded out a nice consolidation here, lots of fear, bear market, high interest rates, right? And now we are full trip right back to it. Now, we've moved pretty much in a straight line again from those October lows. We spent a little bit of, a couple of weeks of consolidating here at the end of the year and start of the new year. But really, outside of this one down week, it's been pretty much a straight line here. Life has been good for mega cap bulls. Now, if we change our attention to the Qs, again, you can see 2.84% already at those all-time highs as well. Very strong move off of those October lows. So when I look at both of these markets here, where it's, full on sort of chase mode, buy mode, uptrend mode. And until we start to break some support, until or if these breakouts start to fail, I think you need to respect the uptrend, respect the all-time highs. As they say with all-time highs, there is no overhead supply to contend with. Those are a good, powerful kind of strength spot to be in. And so let's participate in these markets, in these mega cap stocks. They are working right now. And again, for the SPY, just to take it back here, if we came in next week and abruptly lost the rally that we saw on Friday, if we failed here quickly back below 478, let's call it, in the SPY, that would start to give me at least pause or pour some cool water on the momentum, the latest breakout. But until and if that happens, again, I think buyers certainly have the benefit of the doubt. Intermediate term, longer term levels, again, we'd have to go back to this other chart, this roadmap we've been looking at. 4,700, I'd say, is the bigger intermediate term level. If we start losing that, then we've got maybe some damage and some cooling off and a bigger pullback to think about. But again, that's not the market we have now. We're at all-time highs. Let's see if we can continue to ride that momentum to the upside. The Russell 2000, again, has mostly been now left out of this market. It's been a tough year. It's been a year where in 2020, end of 2023, we had this magnificent kind of November, December rally here for small cap stocks, coming from, the bottom end of the range to the upper end of this range, 26% in pretty much a straight line. We've now kind of chopped around, pulled back. Again, nothing too unreasonable here to go up 26% and then to retrace and cool off a little bit, 8%. Is pretty textbook, is pretty classic. I mean, you'll see that time and time again throughout history. 26% up, 8% down seems pretty reasonable and sounds like something I'd be signed up for. But as we look at just the relative performance, obviously is now a pretty big difference between the Qs over the last couple of weeks is up 6% versus Russell 2000 down 8%, right? So it's that opportunity cost. It's where you're parking the money and positioning. And if you're all in small caps right now, then you're being a little bit left behind. So let's see if buyers can kind of stick a landing here, hold a sort of higher low at 187, and eventually, again, that bigger range that we want to see the Russell 2000 break out from is over that 205 area, which seems like a little ways away at this time. So that covers the big major markets. If we take a look at IEF, so this is the 10-year Treasury bond, you can see again, very similar to the Russell 2000 in the sense that off of the November rally that we've seen here, we were 9% higher, we're 8 points higher here in the IEF. And now for the past couple of weeks, we're pulling back 2%, right? So we're retracing 20% of that move or so. It's a pretty orderly, pretty healthy. Again, something that seems pretty reasonable. You just don't want to see it get too much, deeper. You don't want to see a complete rollover here because we know that the primary trend is kind of down now for IEF. So we're really looking to see if we can stick a landing here sooner rather than later. And again, this is the inverse to Treasury yields that we talked about at the top of the show. Let's take a peek here at natural gas. It's an ugly picture. It's kind of a horror show here for natural gas. Again, on the year, it's still up, right? It's up 2%, 2.5% here. This is the UNG ETF, of course, not the futures contract, but there was a lot of progress made, lots of momentum here. Natural gas was up 50% off of the December lows, and now pretty much after this week here, we're down 24% in five or so trading days. So very painful for natural gas bulls. You're looking for some type of higher low here. You want to see it stick sooner rather than later. You don't want to come all the way back to these lows, and hopefully it's quick on the next week on Monday's trading. So we'll see there. No position. Natural gas always seems to move pretty violently. Let's take a look at Bitcoin here. We can finally start to add some Bitcoin proxies. We've got all the ETFs approved last week. IBIT, this is the iShares Bitcoin Trust. We'll probably be using this one for most of our analysis here. just because it seems to be the winner in terms of volume. So we're going to continue to track this. This has been pretty much a slide here since its I was going to say IPO, since its debut trading. Bitcoin, the commodity, the underlying is basically sideways, range bound between, call it 40 and 45K is where it's basically spent the last 6 weeks trading. So, we'll see how that breaks out that range, but it'll be nice to get more data behind this because I can't quite pull up any good Bitcoin proxy in TC2000. So IBIT trying to stick a little bit of a landing here on Friday. We'll see if the low is in for this. And China, I want to talk about China real quick. So FXI, there's lots of different ways you can look at China, but this looks absolutely horrible. And it is certainly oversold now. Maybe you're in a spot, in a territory here where dip buyers, if you're brave, you can start to look at some of these stocks. But FXI, for instance, down 4.62%, basically back down to cycle lows here, and almost tagging them this week. You could look at, say, CQQ, which I believe is just the technology ETF. Again, you can see pretty much back to lows. And if you go to like Alibaba or any of these big, kind of individual stocks here, they are just almost all back to, decade lows or multi-year lows. And they're just all very much in a tough spot here. So if you're brave, if you can do some analysis, if you're, tactical, manage risk, maybe there's some opportunity here. Certainly an unloved spot of the market, to say the least. There are lots of other stories going on. We had Spirit Airlines. We had lots of other things. Save, I'm not sure. Yeah, this is certainly been just with the merger being denied and lots of action here. There are some individual stock stories that I don't know if it's worth getting into, but we'll round it out here with some of our strongest and weakest. So if we take a look here just at basically the industries this week, we look at the 5-day performance. You can see semiconductors dominate pretty much the biggest performers this week, followed by coal, actually, and then gambling stocks, computer systems. So you're seeing basically a lot of technology with a little bit of, I don't know what happened here in coal, some big names, some big movers here in some of these stocks. AMR, HCC continue to be in some nice, healthy, kind of uptrends here. Arch breaking out. So coal, semiconductors, those were the two spots to be this week. Who'd have guessed it? And of course, gambling, infrastructure, right down the list you can go. So this layout here is kind of an updated, new-ish layout on our store. So if you are a TC2000 user, you can get this, what we call the strongest and weakest stocks layout. So that's it. That's where I'm going to leave it today. Lots happening. Again, earnings season. Double check your holdings, the dates at which your companies are reporting, and hopefully you had a good week out there. As always, let me know your thoughts. What are you watching? What do you think about this Nasdaq rally? What do you think about some of the disparity we're seeing in these sectors? Are we setting up for some negative divergence? Is this another repeat of basically last year with a big tech leadership and very thin breath, or something else that I might be missing? Leave a comment. And as always, I want to thank you for tuning in every Friday. Market analysis just like this. Subscribe to our YouTube channel. Share it if you love it. And I hope you have a great weekend. See you back here next week.